Investors and traders, welcome to the channel Market Chart Pattern. Today is 23rd of June 2024. I hope everyone is having a great weekend. We will be taking a look at the key US tech stocks that we do for this video segment. As always, this video is for educational purposes only and it's not a financial advice. So we'll be covering some of the key stocks that we are covering for this segment. So we'll start with Tesla. What we are looking at is the weekly chart for Tesla, and what we have been seeing is that Tesla has been in a constant downtrend for quite a long time, starting in 15th of November 2021. But we managed to catch this bottom. You can see the old videos on the channel because of this pattern formation, and this low has been held so far. And then we were able to track quite a lot of these movements. Where it got really tricky was when it began to move lower beginning of this year, because we had this point as of 30th of October as a key low where we could see an ABCD pattern taking us much higher. But this is fine because the patterns do fail. But what is happening right now is that sort of negative momentum that existed for the stock for quite some time, it seems to be dissipating, because this is the time, I believe, when the earnings came out, and Elon Musk was on the conference call, and he talked about how Tesla is actually still committed to, and they will be producing lower priced electric cars to compete with the Chinese competitors, and that actually produced a gap up higher. So this is of course a weekly chart, so you can see that, and ever since that we have seen the market just go sideways. So it's just been a range bound market. Now what looks like that we have been in this range for 1, 2, 3, 4, 5, 6, 7, 8, so 2 months. 8 weeks is 2 months. We have when we are sideways for this long a period, to me it is an indicating that the downward momentum, or the bearish bets that were building up before, they are kind of dissipating, because otherwise we would have seen stronger moves lower. That still remains a possibility. However, with this long, as the time goes along, I think the chances of that will negate. So what it means is that we could be forming a higher base and a more like a propeller shaft kind of a pattern that we could actually move higher from here. And for that we are really closely watching this $200 per stock per share level, because that's the 38.2% retracement. So a good close above that would be a good indication, and that will also mean that the momentum for the stock, like these are longer term averages that we are looking at, 89 period moving average, which is the green line, it will begin to improve. At the moment the price is just really on the weekly basis, taking the 20-week moving average, and of course it's a weekly chart. So there is improvement in the momentum as well. If we move down to the daily charts, we can see that. But here, this is really key, that $200 per share level is the key level that we are watching. We also have this channel formation here, so it will be also moving above that. That's going to be another good thing, because you can see that there has been quite a lot of supply from here, so we see the top of this channel here. The other thing is that I'm also looking at as a possibility that what we are doing is in fact forming an inverse head and shoulder, kind of what we had done here. I have not drawn this, but you can take this to this, and from this to this, and here take this one. Let me actually make it a little bit have a solid line like this, and if we just copy this, which I already done, so we could be having a head here and a left shoulder and a right shoulder, and there is a pretty good symmetry there. So there's a possibility of an inverse head and shoulder formation also taking place. So finally for Tesla, looks like things are actually gradually perhaps looking better for the bulls, and it's just been a very long trading range period, in a narrow trading range. I don't think we have seen that going back until 17th of July. We haven't seen this stock go in this kind of a pretty narrow range on the weekly charts, because we can see that some of these negative bars were pretty large. So yeah, that's actually a change in the market behavior as well. So there we go. That's Tesla for us, and then we take a look at the Apple stock. So this is a stock excuse me, We had mentioned this level of around 165 to 163, where we were watching for this pattern formation. So anywhere between 170 to 160 was the kind of level for us, and the stock has done incredibly well, and that turned out to be a pretty good low. Market never actually really went below the $163 per share level, so that's good. So as you know, that Apple came out with its own version of the what they like to call the Apple Intelligence, and one of the things is that what people are talking about is that the software that is needed for it actually requires certain kind of a hardware, which means that it's going to actually start a new kind of a buying cycle where all those people who have older devices for Apple, they want to use or make use of these new features. They'll have to actually buy newer phones to be compatible with that, because the older phones are not compatible. So that's going to spur a new cycle for the Apple products, hardware-based products such as iPhone, for example. So that is also what we have seen, and yeah, this is what we were talking about on the channel before. If you actually really watch Apple closely, what they do and how they come and operate in the market, they are actually pretty much always one step behind in the case, in the sense that, for example, Apple iPhones might not have the latest kind of cameras that might be available on Android-based phones, for example, coming from the big competitors. But after one cycle of those being in the market, Apple comes back with its own upgrade of the product, and they're actually always watching what the competition is doing and how the market is reacting to it, and then they come back with their own products. And with the artificial intelligence, at one point it did seem that they might be behind the curve, because we were not really seeing much announcement come out in the public, unlike things which Microsoft was doing with the purchase of OpenAI or having shares in that, and really publicly coming out and announcing a lot of products based around that. Apple was keeping its cards close to the chest. They do have fantastic talent working on artificial intelligence within Apple company, but you have to be more of a Silicon Valley person, or visit the Valley and talk to people around there, maybe your friends and family who are based in the Valley, and then you begin to get an inside scoop which might not be the mainstream media. So finally, with that, what we have seen is a big weekly candle, which was really impressive to see on daily basis. Seeing the gains, the kind of gains we saw in a stock like Apple, which is a pretty big market cap. So I don't know exactly, maybe about close to 3 trillion. So yeah, really impressive stuff. And where did it go? It went right into the 1.618 expansion around the $218 per share level, and this is a target that we have had for a long time, because what it is basically all this sideways price action that you saw starting from the July of 2023. So close to about a little less than a year. It is just the 1.618 expansion. So it was a target for us, and after reaching that, what has Apple done? It has pulled back a little bit, and the ABCD one-to-one price projection, in fact, indicates the stock could go as high as 237, so around 235 to 237 dollars per share level is actually the target. But along the way in the CD leg, there are these you can look at them as resistance level or as targets as well. So we have this minor resistance level from where we have seen this pullback. But personally, I do think Apple has the chance to go and reach 235 to 237 dollars per share. Okay, now we move on to Microsoft. Another fantastic company is the weekly chart for it, and this one has actually been really involved quite publicly with the kind of things they are doing with artificial intelligence, with having a share in the open the chat GPT software maker, and then integrating artificial intelligence into their products such as the Windows. So really innovating this along those lines, and this is what we have seen being reflected in the stock price, and it's just been a pretty amazing run. And you can go and watch these old videos around here, we were calling for this to be a really key level. And what this is actually this level, which turned out to be a very good low in the market around the October of 2022. We had a number of Fibonacci retracements coming along around here. There was a 50%, 61.8%, and I believe this is 38.2% from a very long, probably going back to, I don't know, 2012. I have to check, but because of the confluence of so many Fibonacci ratios coming together, it was telling me it is a pretty important low, and until and unless it is broken really clearly to the downside, the stock was just moving one direction, that was up. So now the stock actually reached this 433, which is 1.618 expansion, or near around that, and it just went sideways for quite some time. You know, this is like maybe more than 2 weeks, not counting the candles, but roughly we can see, yep, March to May. So you can clearly see, and now what it is doing is actually moving higher. So that's good for the stock, because $433 per share level has been taken out to the upside on 2 consecutive weekly closing basis, which means that this ABCD, which is in purple, I've not labeled it as ABCD, when price projection is active, and 462, 465 roughly speaking is the kind of next target where the stock is likely to go. And now I've not drawn a bigger ABCD, so 500 even, that level is also possible, but just taking one thing at a time, really short term. I believe this ABCD is where the market is going, around $462 to $465 per share level for Apple stock. Let's take a look, excuse me for the Microsoft stock. Let's take a look at Shopify. So here we go. So the Shopify stock is interesting because it had done pretty much what we were looking for. In fact, this candle that you see, we had a pattern formation around here that we were watching around $62 to $60 per share level. That was the 61% retracement on 62.50. But with this kind of at one point the market was just trading much higher, and then I believe the earnings came around here, or something was amiss. I don't know exactly what was in the earnings, and the pattern was fulfilled and actually broken a little bit, because the market went slightly lower to 154, 155. 156.31 is the low around here. And over the course of last 3 weeks, after finding support from the 89 period moving average, is moving above, and not the last week but the week before was a really nice positive candle for it, a bullish candle, and the market closed above this trend line here. So you take this low, this was the ultimate low, this was the secondary low that it came in much higher, so it's good because stock is stronger. And then another low coming in, you just join these lines. Not a perfect line that I've drawn, but you can draw it slightly different ways. The one I have is with some overshoots. In my opinion, that's fine. So it's above that, so that's another good news. Now what would this stock be doing is it is likely to go to maybe target, as long as this low is not broken. It could be moving in another ABCD cycle like here, and I'm gonna draw a shorter term ABCD, not the longer or the big one, although in my opinion we might actually be in a longer one. So here we go, here. So that's the 50% coming around 99. So $100 per share level, roughly speaking, is the kind of level that we could be looking at for the Shopify stock. And here we go. We also have the 1.272 expansion coming around the ABCD and the 50%. So in my opinion, that could actually be also a target and a pretty decent resistance level as well, where we could see the market actually pull back quite a bit around here when it reaches the $100 per share level, which is also psychological level to watch for in the stocks. Is what we are watching in the stock of Shopify. Now let's take a look at Amazon. Here we go. So the Amazon stock is actually really range bound for a couple of months now, because this is a weekly chart. But it's trying to break above this, and if it is able to do that, then we're looking at about 218, which will be the 1.2 216, which will be the 1.278 expansion. But the stock looks pretty good. It's really strong. Let's take a look at Google. And here we go. So Google has completed this big ABCD that we were watching in purple. It danced around quite a bit around 170. So 170 to 194. That's a pretty wide range of about $24 for a company like Google, which is parent company Alphabet, which is a pretty big company in terms of market cap. But looks like this company or the stock is heading into some sort of fairly high level of resistance, where we could see pullbacks happen in the stock. Now the company is doing a lot of things, and they are into AI. They of course have the YouTube. They have also got e-commerce, not the kind of scale of Amazon. They don't have the fulfillment side of it, the FBA, the fulfillment by Amazon. But they are actually working a lot with Shopify and providing a big catalog, and of course the revenue that comes from the search. There are a lot of these e-commerce based companies which advertise on Google a lot, so they have that Google shopping thing. So they've got many things going on. So it's pretty good company. But from a technical perspective, it is also reaching into a certain key kind of a level. Here I don't see anything at all. There is no distribution or anything like that, what we see here. But as the stock moves along, there is some news in the media. I think about maybe 3 months ago we were talking about that we could in IT related companies we could expect some cuts to happen in terms of the headcount, and Google has been recently a little bit vocal about it. This is in the media. So I think inside the company they are aware of certain things, and they are trying to reduce their costs and move certain things to lower cost basis, and that should actually help the profitability, which is something the shareholders like. So that's why probably what we are seeing in this stock and moving in this range now. Okay, now let's take a look at Meta. This is the weekly chart of Meta. And Meta went right to 38.2% retracement. It's just doing a recovery high around here. It has a chance to go and hit this 567, so roughly we can say $570 per share level, because that will be the 1.618 expansion, and I believe we have a smaller expansion of this swing which also comes nearby. Here we go. So yeah, I'm thinking this $570 $600 max is the kind of what we can see the meta stock go into, and then after that we could see a pretty healthy pullback happen in the stock. It looks fantastic. Look, 89 period moving average is around here, where the 20-week moving average is such a big gap in there. So even if it is able to do an ABCD, it can come to 375, which is going to be the 61.8% retracement. So that's another alternative. If this remains a recovery high, then we could be looking at a pattern as A, B, C, D, which will bring it to 375, which is going to be a pretty strong support level. Now let's take a look at IBM. So here we go. This is the old economy kind of stock, but it's of course the big blue. It's involved in many IT related businesses, a lot of infrastructure that runs on their products. A few years ago they bought the Red Hat company, the Linux Red Hat distribution, which is used at an enterprise level. It's on servers running so many applications, so they have got so many different kinds of products in there, and that is kind of reflective in the stock price, at least since 2020. They have a new CEO as well who's making some changes, so this is why we see the stock is actually you can see there's so many overlaps. It's not an easy stock to read unless you just begin to draw a line through the low and the high, and just keep on doing that, and you begin to see how the stock is the price is actually flowing. So it's pretty interesting. So it has a chance, if it doesn't break below this low. Let me actually draw it like this. here. 157, 155. It's got a chance to go and make new all-time highs. Actually, take out these highs from 2013. It's got a chance to actually do that. They have products. They have been actually, working on quantum computing, and then of course they have got some applications which are also AI related. So they have a lot of stuff there. I don't think they're in the chip making business. This is why we haven't seen the stock explode. But on the software side, they do have a lot of IP. It's an old company. It's the blue chip, old kind of a really big company. That's why it's a little bit difficult to navigate and do things which some of the agile companies, more focused companies, might be able to do. But it's certainly one to keep an eye on, because this is what we are seeing. Some companies like, for example, Oracle doing really well. Adobe, I think it's back in fashion as well. They have done pretty well. So these older .com, well, IBM is actually even older than the .com, but they seem to be kind of catching up to the AI wave as well. Now, let's take a look at Netflix. Okay, here we go. Wow, so the Netflix is going for the new all-time highs. In my opinion, looks like it's gonna challenge this. So wow, so looks like people are buying more and more subscriptions to Netflix, and wow, so there we go. I thought that this level of 1634 would be pretty strong resistance, and the stock would actually go a little bit lower. But of course, I'm wrong, and this is fine. Okay, let's take a look at. This is not last but not the least. This is the Roblox, and here I'm conscious of the time as well. So this is the last one we'll take a look at. Actually, we'll also take a look at Oracle, and here we go. This has actually been creeping up higher. This is one stock which has disappointed us quite a few times now, because it just remains range bound for a very long time now. Eventually, it looks like there's a lot of accumulation around here, and the chances are it might actually get to 67.36 is 30.2% return at some point. I don't know when, but it needs to get above 47.09 and finally above 53.81, which is gonna be also an ABCD, as long as this low, which is our assumed point C, is held around 29.58. So this is what we're watching in Roblox. The reason we like to watch Roblox is because we're following a theme of metaverse, and this stock is pretty closely embedded into it. Meta, of course, formerly Facebook, actually they kind of pivoted out and went into the artificial intelligence side of things. And when the Mark Zuckerberg made that pivot, we were right at the 78.6% retracement from the all-time highs, from the IPO lows, or the lows which came after the IPO. And the stock just never looked back, because this is what the investors wanted. Getting into the metaverse side of things required a lot of investment, and Zuckerberg was willing to spend that much money. And what was not clear to investors perhaps was what the return on the money would be. This whole metaverse concept, it's maybe it's going to work out really, really well. People like Zuckerberg, they're really clever people, and they're very informed people as well, because they work with really intelligent people around them. But what was uncertain to investors looked like how much investment is going to go into it, what kind of return could be expected on that investment, and when to expect that return, because obviously there is a whole cycle of building the metaverse, and people getting used to the metaverse, and then finally some commerce flowing, or some sort of revenue generation to profitability cycle that is associated with the AI. It was pretty obvious, and this is what we have seen. So I digress, and now let's take a look at Oracle. It's a weekly chart of Oracle. At some point in time, I had done an analysis on it. So this is why you see all these old charts around here. And in fact, what we have seen is, the market finding, in fact, doing a double bottom around 38.2% retracement, old resistance becoming support as well. So a number of things are happening. And what the stock seems to have done now is, I think it's starting a kind of a newer cycle. So here we go. boom. Okay, so yeah, this is the thing. So this is what makes this really exciting. This was a completion of the ABCD, but now the ABCD seems to be expanding. So I think there is a pretty good chance the Oracle stock, if we just take a range, wow, it's pretty much there actually. 1.618 expansion, but we have another ABCD working out as well. I'm gonna give it a different kind of color here. Let me call it blue. Here we go. And if we just take this and we just boom, okay. Yeah, 160 like 650 is also possible. Z-scaler, let's take a look at this. I almost forgot about this stock. So what is Z-scaler doing on this weekly chart? The chances are that we are in fact in this big ABCD pattern here. 433 to 455 is the kind of target we could be looking at, and then we have these blue lines here, this blue ABCD. So we're assuming that this is point C of this blue cycle, right? Shorter term 321, higher we can go as 433 and even higher. So really interesting as long as this point C is not taken out to the downside. However, the price action over the course of last couple of weeks a little bit muted, especially last week. We saw this negative candle range bound market, but nonetheless the C point is still held. So as long as it's held, we think we are in this ABCD blue cycle, and ultimately the black cycles is what we're watching in Z-scaler. Thank you very much for watching the video, and if you like our video, give it a thumbs up. If you like how we do the technical analysis here using pattern recognition and Fibonacci retracements, projections and extensions and expansions, then please do subscribe to the channel, and speak to you guys soon. Good luck, good trading.